Hey, fellow investors and fellow stock guardians. It's Monday, March 29th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from a mostly red stock market. I looked into the stock market indices movements and dug into the reasons why ViacomCBS has fallen from glory and brought down a family office with it. I also looked into a new IPO from the Future of Shopping list of stocks. The market mostly finished in the red, except the Dow index that wrapped the first day of the week only slightly above zero. The market seems to be worried about the implications of a $30 billion stock sell-off by a hedge fund to meet its margin calls. So who is this hedge fund? It's an individual investor with about $5 billion in assets that uses a family office legal structure to borrow money and invest using margins to trade up to $30 billion worth of assets. One of the holdings of this fund was ViacomCBS, whose stock has fallen off the cliff by more than 51% last week. I get to ViacomCBS in a few minutes. Back to the family office, ViacomCBS was a holding and the price fall created a ripple effect, forcing the hedge fund to sell off the rest of its holdings to meet its margin calls. Further reading on this topic shows the banks that enabled this family office to trade with such high margin levels didn't investigate the ability of this family office to manage such levels of borrowings. All of these trades were done using what's known as swaps. Using swaps, it's a complicated financial transaction and makes it less apparent to the brokerage that enables such leverage investment transaction to investigate how and who is investing and whether this party meets the legal requirements. Of course, there's more to this story that we would need to pay attention to in the next few weeks. I'll keep an eye on this story as it unravels. Generally, investors are worried that there are more hedge funds and family offices with such high risks that may create a bigger ripple effect across the market, and that might be the reason why the stock market finished Monday in the mix. Would it crash the market? Are there other funds with similar risk? And should investors be worried? The answer to all those questions is yes, maybe. As an investor, you should always be ready for such unexpected incidents. Just like when COVID-19 pandemic happened, no one could have predicted it. But had you invested in well-managed companies with enough cash and had you controlled your emotions and not spooked to sell everything you owned, you would have been able to weather the COVID storm. Same thing happens here. Be ready for a crash every day, all day, but move and invest with diligence. Now onto ViacomCBS story. The company has been facing the cable cutting phenomenon, losing cable TV subscribers for many years. In response, it decided to pour investments in its own streaming service called Paramount Plus. The market liked that idea so much that sent the stock soaring to more than $100 per share for the most part last year. Using such a high valuation opportunity, the company's board of directors decided to issue new shares to raise cash. That was about a week ago or so. When the new second offering was announced, a prominent Wall Street investor published a report arguing ViacomCBS is extremely overvalued, and then the dominoes started falling. There is one major takeaway from this story. Old companies can't just solve their problems by throwing money at it. ViacomCBS can't just create a competitor to Netflix and fight the streaming wars. It takes more than money to succeed. Remember that when you're investing in old companies that are trying to put money to fight with the new generation of companies out there. So, ViacomCBS was the loser stock of the day. Let's get to the winner stock for the day. From the winner and losers page under the trending tab on StockCard's website, take a look at ThredUp. It's the recent IPO that jumped more than 52% today. ThredUp is an online market for second-hand women and kids apparel, shoes, and accessories. This is a rapidly growing market. We have seen other IPOs in the same market, for example, RealReal or Poshmark. They all ride the wave that the new generation is into recycling and also fast fashion. People would want to wear nice stuff, but also don't mind selling and buying another item secondhand. So that's why such new platforms are rapidly growing. According to ThreadUp, the second-hand market is expected to grow by 32% year over year in the next few years. I plan to have an eye on this market for a while to see what investment opportunities may come up. If you're interested too, go to the screener page, create a new filter, search future of shopping in the search bar, apply any additional filters you are interested in, and save it. The stock card would automatically refresh the results as new companies show up. I saved this filter I created and leave a link in the show notes in case you want to add those stocks to your watch list. As always, if you like to give a stock card a try, research as many stocks as you want, and receive a stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today, folks. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you tomorrow.